So this is basic terms, lesson 2. So number 8, liabilities. So this is what a business owes. That means here money needs to be paid at a future date. That is called liabilities. So liabilities are obligations which required to be fulfilled at a future date. Number 9, debtors. So a person from whom a business will receive money. So debtors represent or indicate a person, and the business will receive money from the person, maybe because of sale of goods or services on credit. Because of sale of goods or providing of services on credit. 10. Creditors. These are all important terms. Creditors also refers to a person to whom business needs to pay. Why? Maybe because goods are purchased on credit. Creditors refer to the suppliers. Suppliers of what? Suppliers of goods. Whereas debtors refers to the customer to whom goods are sold on credit. Number 11, this is important term, goods. These are the goods refers to articles in which business deals. Any kind of articles which the business deals in will be termed as goods. Like furniture sold by a furniture shop is termed as goods, but the same furniture for any other shops will be termed as assets. For this furniture shop, this is the goods because the furniture shop deals in this furniture, deals in buying and selling of this furniture. That is why the furniture will be considered as goods for this particular shop, but for any other shops, this furniture will be termed as assets. Stocks. Goods which the business has and is still unsold. and is still unsold. Expenses. This refers to cost of goods or services used in the business. Cost of goods or services used in the business is termed as expenses. Like for example, purchase of raw material, salary to a manager, all are termed as expenses. For expenses, money may be paid immediately or it may be paid at a later date. Number 14, revenue. This is cash received or receivable, cash received or receivable from sale of goods or services. Cash received or receivable from sale of goods or services will be termed as revenue. In other words, it can be termed as inflow of cash or receivables. Receivables means money that is going to be received at a future date. That is receivable. Profit. So here we have the formula of profit. So in mathematics, we use this as selling price minus cost price is a profit. But in accounting, we will uh, find out this way. Selling price means cash received, and cash received is termed as revenue. So it is revenue minus CP. CP means cash paid, which is known as expenses. So revenue minus expenses is the profit. Loss is the opposite of this. Loss is expenses minus revenue. So when your expenses is more than the revenue, the business will have loss. That is why it is expenses minus revenue. Or we can use the same formula, revenue minus expenses. If the net result is minus, then that is loss. Accounting. So what is accounting? In short, it is process of managing accounts. Process of managing accounts is known as accounting. Number 18, you have the term accountancy. This is study of accounting rules, principles, ideas. Study of accounting rules, principle, ideas, so on will be termed as accountancy. So accountancy will provide you knowledge, and this knowledge will be used in managing account. When the knowledge is used in managing the account, that will be termed as accounting. Number 19, Books of accounts. Books of accounts refer to the books in which business transactions are recorded. And there are two books where these transactions are recorded, that is journals and ledgers. These two are normally known as books of accounts. Journal is the first book, ledger is the second book where the transactions, business transactions are recorded. 20. Accounting period. So it's a time range. It's a time range of 12 months. It's a time range of 12 months for which accounts are kept. And statements are prepared to find out profit or loss. 21. Financial statement. It includes income statement, which shows you what? Profit or loss of the business, and then statement of assets and liabilities. So it shows what you own and what you owe. Statement of assets and liabilities will show you what you own and what you owe. So these are some of the important terms, and all these terms should be used from the point of view of the business.